Hey everyone, welcome to another video on my channel, and today in this video we are going to take a look at where can markets be headed from here. So for the first time in 2024, it has been a prolonged period of consolidation. Ever since SEBI came out with its new F&O regulation, there has been heavy selling by FIIs, due to which the market has already corrected by 5%. Today in this video, we are going to take a look at where can markets be headed potentially from this point, how different factors can influence our market, and can we hit a new all-time high or not. So that is something we are going to explore. Before moving on, I would like to tell you about Quick Alpha. You can go to quickalpha.in and we have various types of market related services which you can surely check it out. So starting from trade automation services to trading psychology services, you can just visit our website and you have a whole list of services which you can check out and also inquire. And also I have attached the link of First Stock account opening down in the description. By clicking on the link, you will be getting 2000 rupees worth free brokerage credits, and you can also have a free account opened with First Stock. So make sure you check that out. With this, let's quickly move on to the video and try to understand the entire market behavior over the last month. Right over here, I have opened the daily chart of Nifty, and you can see since 2024 there has been a consistent buying in Nifty. Whenever there is a dip, immediately it will be followed on with some good buying in Nifty, right? So for the first time, we have seen a sharp correction and almost a consolidation for one full week with no follow-up buying coming forward. So market is facing a severe resistance around 25,200, and even in spite of a week going by, so we don't see that kind of buying coming forward. So when you actually take a look at it, what might be the reason for this, right? So we can see that by looking at the FII DII activity. So if you take a look at it, this month alone, so month till date, they have already sold close to around 63,000 crores. This is actually the highest selling by FIIs ever. So if they sell for another 2000 more crores, it will be the highest selling till date on a single month. Earlier to this, they had sold in 2020 around 65,000 crores, but barring that, this is the highest selling month, right? So if you take a look at it, actually in 3 days alone, that is 3rd, 4th and 7th of October, right? So only in 3 days, they have sold close to around 35,000 crores in Indian markets. This is post the SEBI circular where they said that they are removing daily expiries. So earlier to this, you can see they were buying somewhere around 10,000 crores, selling somewhere around 20-30,000 crores. Even though they have been net sellers for quite some time, right, the selling volume was lower. So you can see 35,000, 40,000 crores, but what you should also remember is this 35,000 crores came in a span of 1 month. Right? So today we have seen 65,000 crores just in a span of 15 days, and this entire 35,000 crores what they had sold in April, they have sold it in just 3 days in the month of October, right? So the selling is quite huge, and that's the reason the market is unable to go up at the same pace even though DIIs are actually buying aggressively. So you can see that while DIIs and FIIs were buying and selling, so the DII buy value was always much higher than FIIs sell. So if they were selling for 40,000 crores, on the other hand they were buying for 55,000 crores. If they have sold for 20,000 crores, here they have bought for 50,000 crores. So there was at least 10 to 20,000 crore difference between the buy and sell value of DIIs and FIIs. So currently you can see the FIIs are selling so aggressively this month. Actually, even though DIIs have bought for 61,000 crores, the sell value of FIIs is much more than that. Even today, the market has come down by 100 points, and it mostly looks like FIIs would have sold more than DIIs, right? So the interesting point here is, after such aggressive selling, one or the other time, two things can happen, right? Either the FIIs will reduce their selling or DIIs will reduce their buying, right? So in my personal opinion, from this point, looking at the kind of SIP flows we are seeing in, right? So I particularly believe, in spite of the market coming down, there has been no reduction in the SIP. If you see the mutual fund or the DII holding in Indian market, last year it was close to around 40 lakh crore, and this year it is around 66 lakh crore. So the fund clearly is shifting from FIIs to DIIs. So DIIs are now having much more fund who can control the Indian markets. So earlier FIIs had a majority of the chunk, or they had owned the majority of the Indian market shares, and they had complete control. So now the retail money coming through DIIs has actually surpassed that of FIIs, and that's the reason. So DIIs are having equal amount of influence as FIIs. So looking at the way how SIP is still flowing in spite of the market not going up, so these DIIs will be forced to invest in case if the money is coming in. So in my opinion, in case if the market actually ends up coming somewhere around 24,000, right? So this would actually mean that the markets would have corrected almost around 10% from its peak, right? So not just that, this also offers a great opportunity to start entering. So for the markets to come around 24,000, there has to be much more aggressive selling in the first place. So now the question obviously would be, isn't the market already so overvalued, right? So the market has gone up as though there is no stopping on the upside. So why do I still believe it can go to 27,500? So to answer this question, so we have to understand multiple things. The very first thing what we have to understand is, usually in the short term, when I say short term, I don't mean 1 month or 3 months, I mean 1 or 2 years, right? So in the span of 1 or 2 years, it doesn't matter what the valuation is. You always need a trigger for the market to turn around. So a high valuation can continue to be higher till there is a trigger for the market to actually start turning around. So as of now, there is no such trigger which is actually coming in. So if you take a look at it, so there is elections coming in, and if there is a positive outcome of US election, or Fed's cutting the rate, or even RBI cutting the interest rate, right? So if you take a overall look at it, right, so inflation is also slowly coming down, right? So till there is a trigger, the markets can actually continue to be highly valued. So here I will be also showing you the yearly chart, right? So when we take a look at the yearly chart, so almost from 2016, right, there has not been a single year, so it's almost 8 straight years where Nifty has ended in green. There is not a single year since 16 where we have ended the year in red. So what is most important to look at is how the markets have performed over the years. So you can see in 2019, Nifty overall gained a total of 12%. So you can see right over here on the top. In 2019, it was up by 12%. In 2020, it was up by 14%, which is again as per the average. In 2021, it was up 24%, right? So this is much more than the average. Usually 12 to 15% is what we expect the market to go up, but it was almost up by 24%. The next year, it was only up 4% in 2022. The reason is because 2021, the market had gone up by 24%. And in 2023, again we are up by almost around 20%, and in 24, we are up by almost around 15%. When you take a look at this, 15% for the entire year is not a huge jump, right? So 15% is 13 to 15% is something where you expect the markets to grow at, right? But in spite of that, the market valuation is definitely stretched. Let's come back to that. But for this to turn around, there has to be some kind of a trigger. And in my opinion, as of now, there is no such trigger. If you see, a lot of people are comparing that we might see a crash like 2008, but what they really miss is see the way the markets had actually gone up in 2008. Right? In 2005, Nifty was up 36%. In 2006, Nifty was up 39%, 40%. And in 2007, it was up by 54%. So look at the difference between then and now, right? So 3 straight years Nifty had gone 30, 40 and 55% versus now where Nifty is only going up by 10, 15 and 20%, right? So there is a huge difference in the way markets had rallied back in 2007 and the way markets are rallying currently, right? So that's the reason there is nothing fundamentally so wrong that we might see a big crash like 2008 where markets will end up coming down by 40 to 50%. So it came down by 50% in 2007 because in a single year market was almost up by 60%, just imagine, and the markets had tripled in a span of just hardly around 2.5 years, right? So this is one very important thing which we should keep in mind. And now coming to the valuations, right? No doubt the valuation in Indian markets are currently pretty high. So here a lot of people actually mislead you by a fact. So from 2021, right, how Nifty PE is calculated has been changed. So earlier to 2021, they used to calculate PE on a standalone basis. So to understand the difference between standalone and consolidated, let's take a look at Bajaj Finserv, right? So when I actually come down right over to the earnings, so you can see in P&L, the consolidated sales for Bajaj Finserv is around 1,20,000 crores and consolidated net profit is around 16,000 crores. But if I change this to standalone, right, so you can see the number completely ends up changing. So the standalone net profit for Bajaj Finserv is just around 1,400 crores, 16 times lesser, right? So for consolidated it was around 16,000 crores, but here it is just around 1,400 crores. So now the question might be, what exactly is the difference? The difference is consolidated means it will also include the part of the subsidiary company. So the main business of Bajaj Finserv, if it is X, then under Bajaj Finserv there is multiple things. There is insurance, there is Bajaj Finance, there is Bajaj Housing Finance, multiple parts which actually come under the part of Bajaj Finserv. So all this put together, the consolidated business revenue is much higher, consolidated business sales is much higher. So automatically what you see happening here is, so right over here you can see the P ratio was quite high. Suddenly, all of a sudden, the P ratio ends up dropping. So this is one of the main reasons why suddenly you see a dip in P ratio, right? So even though it is at 23, this is a 23 PE at consolidated basis, not at a standalone basis. Earlier to this, the PE was all standalone basis, right? So maybe if you take a look at it, so this in standalone basis would be somewhere around 29 or 30 PE. So is that high? Yes, the PE ratio today is actually quite high. But can it continue to be this high? Maybe yes, for another couple of quarters till there is a trigger. So people who are calling for a crash will surely come, right? So markets are definitely going to correct. This cannot keep going on. But will it start coming from tomorrow? In my opinion, no. Because first, for the market to start crashing, there has to be some kind of fear in the market. So currently, even though there has been such aggressive selling by FIIs, there is no fear in the market. Until that fear starts to instigate, right? So people will continue to do SIP, and as and when the money is flowing into the market, it is very difficult for the markets to start coming down. The very first sign for the market crash is people will stop doing SIP. The second sign where the market crash intensifies is where people will start pulling out. Right now, both are not happening. SIP's numbers are hitting new fresh high every single month. Month over month, the numbers is just going up, right? Nobody wants to stop, nobody wants to withdraw. So that would be the very first sign where people will actually start pulling out, and that's when these DIIs will be forced to sell at higher levels, making the markets come down, right? So this is the reason. Technically, I believe, even though markets might be slightly overvalued for now, just going by the simple PE valuation, I still feel there is a steam left technically where markets can go even higher. So once this selling settles, there is going to be some push by DIS to take the market further to 27,500. So my target maybe till March 2025 would definitely be 27,500. Let me know what you think in the comments. So 24,000, as we already mentioned, might be a great opportunity to start adding up some more shares. But so this is again just a speculation. This is purely my opinion. So I would definitely suggest you to do your own research before taking any stock or before acting upon these recommended investing. I hope you found this video informative and I was able to bring you some value. If so, make sure you hit the like button, share this video and subscribe to my channel. Thank you so much.